Hello friends, I'm Rocky Outcrop. This is Bitcoin Technical Analysis. Thank you so much for joining me. If you're new to the channel, then hit that subscribe button because I'd really appreciate it. Let's take a look at the charts together. Thanks again. So this is the CME chart I have open behind me right now, the 24-hour, that is 1 day, welcome to planet Earth. And this yellow lines here are showing a falling wedge. Now I'm going to actually go ahead and remove the lower line from this and of course the measured move things. Looking at the price action over the weekend, this has become fairly extended in terms of a pattern and I don't really like the look of it. And indeed, we've already discussed this and covered it in great detail and changed it over to a parallel channel as a result of these movements beyond the pattern itself. So just go ahead and do that. And I also like to cover off the fact that we've filled in this gap that we had marked out in the chart, which was offering up a really nice and easy entry, a really nice and easy trade for people. Having pointed that out a couple of days ago, that was a really easy one. Now, bear in mind, of course, that I'm not a financial advisor and none of this is financial advice, but you would have known about that had you looked at the channel. I'm sure you're aware of it. So the questions really actually become the sort of things like, where are the price actions going to be going over the period of the weekend when this closes? And we'll jump over to the spot prices and take a look at that in just a second as well, as that's where those candles will be showing up. Let me just hit the go forward button because I actually already did this just 2 minutes ago and decided that I would do it on camera rather than off camera. So you can see I've just got rid of the bottom lines there and those measuring sticks, and then I'm getting rid of the gap there. Now, what I want to show us right now is that we are being supported, so to speak, by the 21 EMA here on the CME charts. And it ties in quite nicely with this chat that I've seen over here on Twitter. And I want to give a shout out to Peter Hurer right now, who's a really, really good guy. One of the early supporters of the channel here, by the way, as well. And I actually think he's a top guy. So anyway, I'd recommend him for a follow. But over here on Twitter, I'm not so necessarily sure about how great I would take, how much sort of value I'd place in Lisa N. Edwards' technical analysis. Okay, now she's about 105 years old, so she has been doing technical analysis for quite some time, but she often gets it wrong, and that's why I stopped following her on Twitter, despite the fact that I like her banter and she's good crack. Okay, but actually, I don't want to have my own Twitter feed coming up with noise all the time, so I stopped following her. And anyway, she says about, I don't know, not that long ago, she said at 1:12 p.m. What's that? So about 15 minutes ago or so, she said, right now at resistance and still under the cloud, this is where we may see a drop to 11,300, as I mentioned earlier. Unless the whales, whale, pump us right through, which happens a lot right now. Okay, so that's not really saying anything much at all, other than the fact that they're below some Ichimoku cloud. Let's get upper draw in here and see, yes, indeed, we are below the Ichimoku cloud. And well, I'm not a massive fan of the Ichimoku, but if you use it yourself, that's cool. And you can totally go ahead and do that. What are these lines all about? Nothing really kind of jumping out at me is making any degree of sense, really. But I guess people sometimes feel the same when they look at my charts. And I have lines going everywhere, hopefully not too badly here on the Bitcoin show today. Anyway, this is what she's talking about. And let's see what Peter says, because to be perfectly honest with you, I'm far more interested in what Peter has to say than what Lisa N. Edwards has to say. And let's see, the 21 EMA should provide support for us on the 4 hour, 3.5 hours to wait. Gold seems stronger today. Only good things can happen. Okay, cool. So let's take a look at the spot prices and see how the 21 EMA is lining up on the daily, and then go take a look at what Peter was talking about in terms of the 4 hour chart. Cool. Nice one. Let's just, oh, by the way, as well, I was actually looking for something what people might want to say in the channel today. If I just dive over to the Discord, you can see in the Discord and the daily FOMO free TA, I'm asking people here if you've got anything particularly that you'd like me to talk about in the episode today, because, if you don't, that's cool, because I'll just go ahead and do what I normally do. But if you did, then you could have got in there for a wee sort of suggestion. You snooze, you lose. So back over here, and the 21 EMA, like I was saying, on the daily here on the CME is giving us that little bit of support. But if we jump over to the spot prices, we can see that this 21 EMA is actually above our heads, currently offering up that resistance. And at the same time, here we have the bodies lining up perfectly with this fuzzy grey line that we drew on the charts several days ago as the resistance for us in terms of our closes. Interestingly then, if we zoom right in, you can see that we've really just come quite close to 21 EMA and not actually touched it today, but got really pretty close to that line there with our highs, which are 11,500. The current price is being 11,469. Now, Peter was talking about how on the 4 hour, we should be getting a little bit of support for us if we need to over here on the 21 EMA. And he isn't wrong about that. If we just look back at time, back in time, going back the way, where has the prices been in relation to the 21 EMA? And you can see over here on the 24th of August, we came up above it and then sank back down below it again on the 25th. And you can see just as a general marker of trend that when the prices are above the 21 EMA on, any time frame really, then you have that sort of relative trend identifier for that particular time frame. And we are indeed, of course, when we're above it, trending towards the top side, came up then back down again, and we were trending towards the downside. So the fact that the prices have moved up today above the 21 EMA on the 4-hour time frame is quite positive. But where they find themselves right now is right here at this top of this little parallel channel, the white one in the foreground here. I say the foreground because in the background, if I zoom out a wee bit, in fact, if I just go up to the 24-hour time frame again, you can see there's this purple one that we were in previously, and we've seen the interaction with the price action when they came up towards the top end of this parallel channel, how it wasn't able to successfully push outside of the white one and back into the purple one again, giving up this zone over here where you could be then starting to think to yourself, well, I wonder how the price action would respond if we made it into this territory. A couple of things I'd point out, I suppose, while we're here on that topic would be that if we did go up above it, we'd be above the 21 EMA on the daily, which as you can see, we haven't been since the 25th of August. And that would be fairly good, much better, of course, than on the 4-hour time frame, where as you can see, moving above it has been quite good in the past. Obviously, a bit of a failure here, and we saw it coming back down here after moving up above it there back in this period of time in July and whatnot. But generally speaking, it's a pretty quick and ready way to establish, the current direction of the trend. So this is obviously currently stanced in a negative way, but on the 4 hours time frame is in a positive way. Now, there's also a little bit more I'd like to point out in terms of that dynamic on the 4-hour time frame, since you're talking about moving averages, and that's a pretty good thing to talk about since I didn't really talk about it in the last couple of episodes. So let's do a moving average style one, and it helps for you over the weekend. I do think if you keep an eye on these things, it might let you have an idea of where the prices are going or have been, or where you're finding support and resistance. As of course, I'll be taking the weekend off from doing technical analysis videos. That's what I do these days. Great, nice one. So, and of course as well, you can discuss all of this sort of stuff in the Discord. I do talk in the Discord over the weekend. Anyway, looking at this here, you can see this white dotted line here. It's just a series of dots, and that is the 200 simple moving average. And you can see this red series of dots going down the way here, and that is the 50 simple moving average. And as you can see here, we're coming into an area where those two could potentially cross. That would be a death cross, but of course, the actual official death cross happens on the 24-hour time frame, or the 1 day. As we have it on Earth. But if we see this cross on the 4-hour time frame, it is significant as an identifier of the sort of medium term, if you will, trend. Now, looking back the way, let's just see the last time that they crossed one way or the other. Going back in time here on the 4-hour time frame, going to have to go back quite a wee distance, and we can see over here that on the 23rd of July, when they crossed towards the top side, it was quite positive in terms of the price action. Now, of course, the precursor towards it actually crossing happened back over there on the 21st of July with this upward movement past resistance zones and into that 10K area, or well, no, sorry, not into 10K, but past this point of control, you could maybe say, in around this zone when we came up the top way. I don't need to reanalyze the past. Anyway, we covered this in detail at the time, but just pointing out that there was this golden cross there. Now, if I go back the way then and find the previous death cross, what happened? And we almost had a golden cross here, but we didn't get one. In fact, it was this death cross over here. And when they crossed, they came in and tested both of those moving averages here, the 50, the 200, moved up above and then back down below again, and had a fulfillment of that sort of strategic element to technical analysis playing out for the next number of days, and a couple of weeks as we look towards, or was it how long I'm talking here in terms of days? Yeah, so the 18th up to the 24th, or 20th or whatever, a week or so of downward or sideways price action as a result of that. So I think it's fairly significant if we're looking at that over the period of the next weekend and upcoming price action over the next few days, if these are to cross towards the downside. But that doesn't mean that we don't get any upward price action. Of course, We talk about these things so often on the channel that if we did see these cross, we could in fact see the prices come up towards testing both of these moving averages and giving us a little sort of indicator or indication of whether or not that is a real cross or not. Bearing in mind, of course, there's plenty of examples of times where it got pretty close and didn't cross and whatever, just like over here. Now, if they were to not cross and move towards a move and diverge away from each other, that would be because the price action is indeed getting stronger. And what would be required of that? Well, it would be to move past the 200 simple and indeed the 50 simple towards the top side in order to kind of drag those two things away from each other again. So what we can look to then in that sense is whether or not the prices are moving above 11,700 or 11,600, we could say maybe over the next day or two, in order to be above this 50 simple moving average in terms of being a bullish type area to look out for, or indeed if they come up here and are rejected from them within this 11,500 zone, how that's fairly negative. Looking back over here, you can see that just in a handful of 4 hours ago, back there yesterday on the 27th of August, the prices were all the way down there at 11,121. So to be honest with you, and rather than looking into detail about what Lisa said, in fact, maybe we should do that. I've got no idea what she's talking about when she comes down to that, when she's talking about that 11,300 area as being sort of particularly significant necessarily. Gold has two patterns here for this correction. Well, Peter was talking about gold as well. I'm not going to look at gold in this episode, but I do say that maybe you should go ahead and look at that yourself and see how things are going, because it could be interesting. Where is she talking early on? Bitcoin, zoomed out to the weekly. Has anyone noticed the inverted head and shoulders here? Shallow right shoulder, but I checked the rules, still valid. Well, okay, let's take a look at that as well for another little sort of shout out to Lisa N. Edwards. Going over to the weekly, zooming this back down again, and we're looking for an inverted head and shoulders. Inverted head and shoulders. Inverted head and shoulders. Well, okay, so we have downward. Wait, where is she saying it is? Where is she saying it? Where is she saying this? Let's get this picture up here. So we have an inverted head and shoulders here, following in from an uptrend. Hi, Lisa. There's a rule about head and shoulders. It's a reversal pattern, and you would be looking for a downward trend if you're looking at an inverted head and shoulders, or an upward trend if you're looking at a regular head and shoulders. As you can see, the preceding price action towards this head and shoulders is indeed towards the upside. I think you should probably double check those rules. I'm now not going to look at Lisa N. Edwards' page anymore, going back over to this price action. So I would disagree with that one, just basically based off the rules here. Is there anything that could be interesting about it? Well, when people talk about head and shoulders and things like that, what they're really kind of talking about is perhaps, the reversal of the trend. And let's just have a look here and see, well, we have upside trend in price action since Friday the 13th of March. We put in a high over here, we put in a subsequent high. That's not bearishly divergent on the RSI. So from that point of view, you're looking at a decent sort of strength move towards the upside with the trend not really necessarily diminishing. And let's just look down here at the stochastics as well. So we've just come in and managed to get what would be class B bearish divergence, but not exactly anything particularly strong there on that sense, if you'd like to categorize it that way. Come up here without the divergence as well on the DMI, and the MACD also managed to do that without divergence. So there's your sort of big macro trend. What are you talking about, Lisa? Anyway, I like her as a person. I don't like her as somebody who would look for tips. Anyway, I'm not a tip taker, and all tip takers are tip givers and tip takers and that. So don't. That's not how we work here on the channel. Anyway, so we've come up here, and that's the macro trend. But let's just have a little sort of quick caveat about this. The 21 EMA is coming in here at the minute at 9,842, and coming down and testing the 21 EMA is of course very, very common. This is of course what I'm kind of focusing more on EMAs in this show. It's very, very common, and it happens across all time frames, and of course as well, it doesn't need to be the 21 EMA. If you're Peter Brandt, for instance, use 18. It doesn't matter, got an itchy nose. It doesn't matter what particular number you use necessarily. I mean, I use 21, okay? God, this itchy nose is killing me. So yes, this is where the 21 EMA is. Let's just look back in time and see, well, we tested it here, but we actually broke through it. We came in here and tested it and broke through it as well. When we tested it here, we broke through it as well. So when you're looking up as far as the weekly trend, actually this is giving you a far stronger signal in terms of the trend when you move past it than you get on the lower time frames, as you would expect, really. And to be honest with you, just like Peter Brandt would tell you, the daily time frame does throw up a lot of false signals when it comes to 21 EMA, and especially as you go down the time frames, you're going to find a lot more of that. If your approach to trading is to call these things signals in the first place, then you'd have to call it, a false signal on the lower time frames quite often when you move past one or the other. It really depends on how you want to consider that, though, but I'm not going to break that down any further than that. As you can see here, when we moved up above it, that was kind of like a false signal on the weekly. When we tested it here, it came back down immediately thereafterwards and then sank down again. So what you'd be looking for would be, something a little bit more longer lived maybe than this one particular week movement up there. WEEK, but actually presented as a weak WEAK movement towards the top side anyway as well, and then we saw it sinking back down again. Looking over towards the left, can we see other examples of it, busting through it there? And then here we have, a couple more tests of it. So this is a fairly common thing to happen. If we were to test it and find support at it, then that would be, of course, a continuation of the overall bull trend, where we've had a significant pullback in the prices. And how would that look if that were to happen over here on the CME charts? If we just put the drawings back on for a split second, I know I'm not talking about drawings, but if we were to, and this for this channel, have I deleted the? Or is it just they don't show up on the weekly? Just don't show up on the weekly. They would take us down to between these two blue lines here, potentially filling in the gap here on the CME chart, depending on how things go. If this became backwardized, especially the futures during that process, it would make it easier. And of course, you could just be looking at a test on the 21 in terms of the weekly time frame from the point of view of that price action on the weekly. Here, it'd just be like a test of it, or indeed if it came down below it and went up again, then the target to really be looking for would be in that 9,000 area where we have this blue serrated line and the 55 moving average as well, coming back down and retesting this weekly sloping downward trend line. I drew it on the weekly, that goes back for the longest time really. Actually, looking at this right now makes me think maybe I ought to bring this chart up full screen. I know I'm not intending on doing drawings at the minute and looking at these sorts of things. This would have been your sort of potential sort of bump and run type pattern. And this is, no, I'm not looking at that. Not looking at that. If there was to be any sort of inverted head and shoulders, by the way, it would need to be something like, we just hide all the drawings again. It would need to be something like this, where this is your neckline here. This is a shoulder in around this area. This is a head. This is a shoulder. This is just coming back up towards the neckline and busting past that 11,800 area. Could see movements towards the top side. Now, watch the previous episodes. I've laid this out for so many ways. Looking at Fibonacci's, looking at horizontal lines, looking at various things in terms of the price action, that you might find that this correlates. If you've already been watching all of those episodes, that might correlate for you better. And why would that be the case? Well, but I would say that this is what she was talking about, right? In terms of an inverted head and shoulders, that doesn't work, right? Because of this upward sloping movement beforehand, and this wasn't just some sort of overnight thing. We're talking like prices moving from December all the way up until July. You're talking like a decent 6-month long trend towards the upside. This isn't just some sort of blip. So no, that's not an inverted head and shoulders. It can't be one. It's against the rules of the textbook. Okay. The closest you could get to that, by the way, if you are interested, would be from sort of point and figure charts like Peter Brandt talks about with the not just Peter Brandt, sorry, he didn't invent them; they were invented before he was even born. But he likes to talk about the compound fulcrum. I think it's his stab at being sort of getting a bit of a sort of pattern that he can go to from time to time to be like the man of the moment, and that would maybe be a compound fulcrum, perhaps. Look into that in your own time. I'm not going to bother. Instead, I'm actually far more interested in the possibility of this being head and shoulders on the top side and movements up towards that 11,800 area that don't break it and then coming back down again. You could see some sort of head and shoulders type pattern here on this chart. Bearing in mind that would matter, that would fit with the textbook given this rise up in the price beforehand.